Okay, everyone. Thank you so much for joining the morning Friday live session. Last day of the month, we had some ambitious goals for the month, and for the most part, in my trading account, I know I hit all of them out of the park, and I hope you did too. Um, Again, for those of you who are watching this on the free side, we have a 50% discount membership. Today's the last day actually, so 1 month is $50 and 3 months is $150. So I do hope you guys come join. So you guys will get to take a peek at how I run the live sessions, those of you who are watching for free, right? So welcome everyone from the Advantage side. So here we go, folks. All right, let's take a look at the price action in different ranges, right? So first things first, what we want to do is chop up this price action in a couple different high, low, and EQ ranges, right? So far what I see is this is the range high. This is really the range low, which was also, obviously previous resistance that got smashed through, came back around as a retest. So I know for sure that in large part, the range high is right there around 94.40. The range low right there is around 9,200, and the mid is around 93.30. Okay, it doesn't have to be exactly the mid at both places. In terms of this high and this low, I like to look at the mid as a key pivot area of how price action is, sort of revolving around a key level. And what I've seen so far is the key revolution of prices right around 93.30. Number one, given the fact that you could see all these candles right here, they refuse to close under 93.30 for 11 straight hours, right? And then once we got a clean smash through, once the candle right here broke above that, okay, right there, then you saw, four hours or so of more upside. And again, once this candle closed below 93.30, we saw, 4 more hours of price spending more time under the bottom half of this larger trading range, okay? So the way you sort of define these is you have to understand, key levels that price is really trying to move around by, looking at candle closings, looking at where you see a reaction to the price, whether candles close above or below, on a 1 hour time frame. And the reason you do that is because the bots and the algorithms, right, they're very quick to flip key areas like this as support or resistance depending on how these candles closed, okay? And same thing with SR levels, right? Like, for example, if you got, this as a resistance, right, and Bitcoin smashes through that, the bots will quickly turn that same area as support. I mean, almost to the dollar, okay? So you can see right there, right? We were just $2 or $3 below this high right here. And so you could see that, the bots are quickly willing to sort of turn that area, which was previous resistance right there, into support. This is not, magic that SR levels just come to be. It's due to the fact that there is, bigger players such as, bots and algorithms who are defined and set to essentially, turn these key areas that have been previous resistance to flip them into support as soon as they're broken like this, okay? That's essentially their job, right? And so when we look at these levels, we realize that, okay, well, if this level has been turned into support, right, all right, we should be pushing higher. And this is kind of what we define right here in our community. We actually did go long from here on up. We got stopped out of this candle, but again, we were able to jump back into a long in this area right here as we saw the spike down and a push back up in price. And then some of our community members did take profit in that $9,500 area. So kudos to you. I'll be honest, I did not. I slept way too early and I wanted to wait for this thing to bounce right here and take profit up here on the second go around. That was just my strategy, but I got stopped overnight, actually at a break even, literally. My entry point was 92.90 on average. My stop was 92.95, and with slippage, I got stopped out at like 92.87 or something. So just a hair like right around this area, I got stopped out. Okay. So anyway, so where is price right now in relation to what the overall structure is, bias is, sentiment is, right? So let's look at it. So remember, we chopped up the range in high, low, mid, right? So we're below the mid. We've closed 1, 2, now about to close the third hour below the EQ of this range, right? And so if we are going to close below the EQ of the range, we should, very well be targeting the low of this area. So if you are short or you want to short, you could be targeting this area low right there. Okay, I mean, obviously the R is very close and very tight, but again, if you are getting into a short, like say right there, your stop would be above this area, and your target would be somewhere in this green box. So if you want to go for a quick scalp, that would be it. What I would be waiting for, and what I am personally waiting for, is to see the reaction out of this area once we tap inside of it, okay? Because notice all these candles, when I draw out this, green block, is you could see, pretty adverse reactions. As soon as price comes back into this area, it moves away quickly from it, right? So that just tells you that there's some heavy buying happening right here. And it's actually also visible as per EXO, which I showed you guys yesterday, okay, which I showed my advantage community yesterday. But the good thing is right now, price overall, right, is going down like this, and notice how the volume is also going down like that. So what that tells me is price is slowly being guided into this support, meaning that it's essentially being bought as it approaches this area, okay? Because if it was heavy selling, there would be less buying. So that means there would be more volume, right? And the price would be sort of dropping fast, into this area. But that's not what's happening, right? Especially if we look on the 1 hour, right? So here are the last 3 hourly candles. Okay, that's these right here. 1, 2, 3, right there. Okay, so 1, 2, 3. So you can see 178 million contracts, 20 million negative delta, 107 million, right? Positive 14 million delta. And now it's even less contracts, 69 million. And again, fairly low negative delta, okay? So as we approach this green block, I want to see it hold, to be considering to go long from here. If it doesn't hold, then I'd be looking for sort of a pull down here, push back up maybe as a rejection of resistance, and then I'd probably be going short. But I'll let my advantage members know exactly what I'm thinking about doing. But for now, when we start dialing out to the higher time frames, this is kind of where things get interesting, okay? And if we start dialing out to the higher time frames, like the 4 hour, for the most part, I mean, I don't really think anything has changed structurally. We should not have had reacceptance back into this area, especially after sort of a big high volume rejection push to the upside. But it makes sense, right, that we hit $9,500, a key resistance area, and we got sold off below, right? And so now the question is, is this low right here, this low, is it going to hold right here, okay? And for now, I mean, I don't see why it can't hold. It's held pretty decent support right into this area for, a good day and a half, 2 days, right? So what we're looking for now is, if we do come to this area, I want to see price kind of go like this and then start breaking through. Maybe, I don't know, a day or two into February, right? That would make me feel comfortable with this kind of price action, okay? But so far, I really don't see a cause for concern. Now, where I do see a cause for concern is, excuse me, if I see price being reaccepted into this area right here and below, okay? Now, I think it was Timeless Being who was talking about, reacceptance, right? Reacceptance essentially means it's a terminology, whether you want to call it reacceptance, rejection, same thing, right? You could see that when we had this big sort of wick down here into this previous area that was consolidation before the big push up, okay? When we do have a price come back to that area, you do not want acceptance in the area, meaning you don't want price to stay down here. You want it to be swiftly just rejected and say, nope, get out of here, and price just to be pushed up like that. So this was a key area where price was not accepted, okay? Meaning that the bulls really defended their positions and really bought up everything that was sold in anything below this right here, okay? And obviously even higher, okay? So now, like I said, you don't want price coming back to that area, period. I mean, that is one thing that I would make, or I would rather, you know, feel a bit more bearish on, and then I would consider going short. I would not even start thinking of long positions if we're going to sort of come back into this area, okay? Because what that would tell me is we may have finished a larger 5-wave count, you know, like I've been showing you all the day before. It's kind of like this, right? This could have been the 1, the 2, this could be the 3, the 4, and this is the 5, okay? I think if that is the case and we start coming down here in the 9,000 region, I don't think it's a good thing, okay? But anyway, it remains to be seen how the daily is going to close and even the next, you know, couple of 4-hour candles, okay? So far, the daily looks like crap and does not look good. And if this is how the daily is going to print and close, you know, we may be considering more downside ahead, okay? So careful on, you know, your longs, your aggressive longs, and start pivoting yourself, at least on the shorter time frames, for a neutral, you know, bias and maybe a turnaround, okay? But anyway, until then, the shorter time frames should be holding this box, you know, as a demand structure. And if they don't, that's a different story, okay? All right, there's another thing that I wanted to talk about. So here's another thing, right? At the very most, you know, I guess we could come down to this green block right here and still be overall bullish. Like if we're looking at the larger time frame, right, like a daily chart, and we're saying that, okay, well, you know, we've printed a low, a higher low, a higher low, another higher low. So what's to say that we don't sort of bleed down maybe, you know, $200-300 and put in a higher low like that? I mean, that's very possible, like I said, right? We could still potentially be bullish if that's the case, but that means that you'd have to suffer through, you know, $200-300 more of bleeding. And why would you want to go long in that if your key structures right here are not holding, right? So the point is, you know, maybe just wait for confirmation to see how this support right here holds. If it does hold, by the way, I could see something like this happening. Okay, if it holds and price is really weak and demand is weak, what it's going to do is go back to the EQ right here, and then start selling off again, okay? And that is not a good sign, okay? That would mean that if you did take a long here and you start seeing this come back up here and then start selling off again, then you probably want to close out your long and then consider going short, okay? Again, not investment advice. That's how I would play that, all right? Because if it's going to come back this area, it should just start moving, you know, towards this area, quick consolidation, move up, okay? It shouldn't be spending, you know, dilly-dallying up here and moves up and then comes down like that. It shouldn't be doing that, okay? If the bulls are really strong, they let the price come here, boom, quick consolidation, smash through it, okay? Because I'm telling you that this 93.33 marker is exactly what, you know, professionals and algos are looking at. I'm not saying that with overconfidence. It's almost apparently, you know, visible that this is the key area for the bulls and the bears to defend, you know, one way or the other, okay? Stay above this and you have, you know, more upside. Stay below this and you have more downside, all right? Is that clear so far, folks? Those in the advantage side? Let me take a sip of my green juice. Perfect. Okay. So, I mean, you know, like I said, I'm not of the opinion to want to switch bias of the bullish structure just yet. But I did, you know, I don't want to say I told you so, but I did warn you guys that this $8,500 to $8,600 area was going to be tough, right? I said this over and over again. And the reason being was, this high right there in June 2019 was a key pivot, just like what I showed you guys on the 1 hour, right? It was a key pivot on the daily time frame. So it's resistance right there, support, 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 support. And then once we finally smashed through it, we came to that same area in October, but then couldn't really close properly above it and then sold off. And so, the fact that we're coming to that same area again doesn't mean we're going to sell off the same way or that aggressively, but just means that this area definitely poses some strong resistance, and it would be wise to take profit in this region, right? Okay. Another thing that I told you all about is my little, monthly chart, right? So I stated this yesterday in my evening live session for the Advantage members, all right? So we stated that if you guys know something about fibs, is that the golden pocket, which is the 61.8 to 65% area, is typically a region, whether it's in equities or commodities or crypto, it's very useful in finding bottoms or tops, or retracements from top to bottom or bottom to top. Okay, so if we do a Fibonacci tool retrace from this top, the 20,000 top, to this low right here, right? So that's the first cycle high, cycle low. And then that gives us a retrace back to the upside right here. Notice exactly where that reaches, right? 61.8 to 65% of this high to this low. Perfect, right? Golden pocket, okay? Another reason why I like that area is because if I throw a horizontal line right there, right? Notice where that is. 13,873, right? That's the closing of this candle right here on the monthly in December 2017, and that's the open of January 2018. Okay, so on a monthly time frame, not only did we get this candle right here in June 2019 to smash right into the candle opening and closings in 2017, but also that it happened to be the golden pocket, right? So now, how does that help us to where we are now? Well, we're kind of in the same, cycle predicament, right? We are from cycle high, which is 13,900, to cycle low, which we just had in December, 64.16. Okay, you could see the retracement back up for the golden pocket is right around 11,000. Okay, 11,000, 11,300, as you can see right there. I don't know if that's clear. And then the candle monthly opening and closing is right around the same area, give or take $200, right? So that's around 10,760. So if we were to move up, okay, say in the coming few days, maybe a week or a month, I would be definitely targeting that area. Okay, now I'm pretty sure people are watching this and they're going to say that, oh, well, if it gets to 11,000, it's going to go to 12 or 13. No, that's not your job. Okay, your job is not to predict how high it could go. Your job is to trade on technicals that have been tried and tested, right? If it goes over, that's a different story. Then you're looking for confirmations that it could stay over, right? And more than likely, if it's going to go over and stay over, you'll see an hourly or 4-hour daily retest back into this area as support, and then it'll start moving up and away, okay? It's not just going to smash through and never look back, okay? That's not how, technicals would work, and also not how, the bots and the algos would be able to sort of flip those areas to grab more liquidity, right? It just doesn't make any sense. So point is, that would be the area, would be my final target for the end of this cycle, okay? So the point is that, if this bullish cycle from 2015, 2016 was 2 years long, right? And then the bear cycle right here was a good year long right here. Then this bullish cycle was 6 months long. And then this bearish cycle was 6 months long right here. If we're just taking into account bullish and bear cycles that are being cut down by half, this bullish cycle should be ending somewhere in probably, March, like beginning of March or end of March, okay? Because if we're just saying, okay, you know, we had 2 years of a bullish cycle leading up to the 20,000 high, right? And then this bullish cycle right here was 6 months long. So that's, you know, almost 1/3, 1/4 of the entire bullish cycle that we had before. And then 1 year long bearish cycle, and then 6 months long bearish cycle. I would probably figure that this cycle right here should not be longer than 2 or 3 months. Okay. Does that make sense? I mean, do you guys see where I'm going with that? Yep. Okay. Perfect. Yeah. So the reason I wanted to explain is because, you know, more often than not, we get caught up in this, right? There's this hourly time frame, you know, garbage that you see, this chop, and you forget to sort of dial out into the 4 hour, the daily, and the monthly, and then you start to recognize these levels, these patterns, how fibs work, and how larger cycles are at play. And then once you start dialing out, you get to see the bigger picture at play. You know, the bigger picture is this, in my opinion. Okay, the bigger picture is this. All right, there's a big sort of a flag right here. Okay, this is a flag pull, and I personally think that this is a pennant. Okay, and if this is a bull pennant right here, at some point, maybe, you know, mid to late 2020, we should consider breaking out this pennant to the upside. Now, if we break to the downside, I mean, you know, then the cycle lows from 2019 are in peril. So that means $6,400, $6,500 are well within reach. If we start breaking to the upside, right, then we have that 13,000, 14,000 high that is possible, and possibly that 20,000. But until then, we're in this middle of this big sort of pennant, okay? And until then, I don't see why we can't just, you know, hover around in this pennant kind of like this, you know, until we reach a critical breaking point or you know, come close to right near the end, and then break out or break down, okay? I really don't think that, you know, if we're going to go straight up, we're just going to go smash through it and then go like this. I just don't see it right now, okay? Let me check out the indicators first. All right, so the 1 hour Stoch RSI has bottomed. All right, now I want the 4 hour to make sure it's bottomed too. All right, that's perfect. So the 4 hour Stoch RSI is bottomed, the 1 hour is bottomed, and now we're coming close to the daily as well, right? Rather overbought, okay, and it's twisting back around. So this is also a positive sign that, you know, if we do have the daily, all right, in the overbought, and the 4 hour and the daily, and the 4 hour and the 1 hour oversold, we could be potentially waiting for more of a pullback, okay, as per the daily time frame. And the hourly time frame might give us a nice bounce. So what that tells me is, if you're just looking at stochastics, right? If I was looking at the stochastics and I was saying that, okay, I see 1 hour and 4 hour oversold, so that means that we should be coming to a, you know, a close, or rather a bottoming in this particular region, and we might bounce back up. But if we do bounce back up, I think our ceiling might be limited around 93.30, 93.50 or so, okay? And maybe to get that daily Stoch RSI into oversold, we might have to come down again and again and again. And that's where things get dangerous, because like I said, I don't want to see reacceptance back into this, you know, 92, 9100 area, okay? So I'm a bit cautious to see, you know, exactly where we are. I really don't want to see prices, you know, come down past this level right here, 91.99, but we'll see how it goes, all right? That's pretty much it, folks. Any questions so far? Can you explain how the CME closing today may affect price? Well, in large part, I mean, so I personally think that there's a misconception in the CME contract understanding. So here's the thing, all right? When the CME contracts are up and the monthly is about to close, it doesn't mean that price is going to come down right at the end of the month just because, you know, people think that the contracts are expiring. Most people close out their contracts well before the expiry, okay? So it's not like everyone waits till the last date. Because remember, if you're closing out your contract, you're trying to close it out in profit. You're trying to, make sure that someone else maybe on the other end, on the other side, wants to buy your contract off you because he or she thinks that there's some life left in it. But if they don't think that, why would they buy your contract? So your contract might be worthless, right? So you want to sell your contract well before expiry. And so with that being said, I personally don't think that the end of the month has a massive impact due to contract expiry. It may be just due to the fact that traders themselves are positioning themselves for the month ahead, right? And so that might mean that, okay, well, January is over. Let's start thinking about how February is going to go. I mean, that would be their thought process. And with that, comes less volume. Okay. So if there's less volume, less to move the price in a particular direction, and less, the retail is sort of left to their own devices to figure out what the price is going to do until, the bigger players in the market try to figure it out. And so that's why you see, the market kind of selling off as is until CME and the bigger players try to figure out what they want to do with the prices. By the way, so now that we have the 4 hour into this area, right? What I want to see on the 4 hour particularly is I don't want to see price close below that on the 4 hour time frame. Okay, that's the 90 to 60 marker, let's just say, right? Closing your 4 hour below that would mean that you've basically taken out, the last little low right here in this area of candles opening and closings, and you might potentially push lower. Okay, but if you close higher, there's more life left in the price, and you could kind of go like this and go like that. Okay. So anyway, I think that's it. I'm gonna wrap the session up. Really not much else to say, but I'm glad you guys did come join. Thank you so much for watching. Again, if you are on the free side, do come join the 50% discount off. You'll get live sessions like this at least twice a day. And I hope y'all enjoy the content. All right. Take care and cheers.